Today we'll be diving into the ThinkorSwim website to learn how to buy and sell spreads within here. Just keep in mind that this is the web-based version of ThinkorSwim, and although it is very similar to the desktop platform, there are still quite a few differences. Now, like I mentioned, in today's video, we're going to be specifically focusing on how to trade spreads within here. The three spreads that we'll be touching on being verticals, iron condors, and butterfly spreads, since they're a few of the more commonly traded spreads out there. We're going to begin by first pulling up a stock and then opening up the option chain, and this can be done by simply coming up here to the search box at the very top of our screen, and then simply typing in the stock that we want to trade. In this case, Microsoft or MSFT. You can then see that takes us immediately to the stock profile page, where right here we can see a little bit of info about the company right up here at the top, and in the upper right hand corner a couple trading buttons to actually buy or sell the stock itself. However, what we're going to be looking at today, and more importantly, is down here below we can find the option chain, and in order to open that up, we're simply going to hit the little arrow just to the left of it. I'm not going to be spending too much time explaining the chain itself and how to customize it, but here on the left-hand side, we can now see all of the available expirations for Microsoft. Beginning here at December 23rd, going all the way out to January 17th of 2025. To the right of each of those expirations, we can also see the number of days until expiration right here in parentheses. So in this case, December 23rd is 0 days from now. And then over here on the far right-hand side, we can also see the implied volatility as well as the implied move for that expiration. In order for us to expand one of those expirations, we will simply come over here to the left-hand side and then click on the date to open it up. In my case, I'm just going to go ahead and open up the January 20th expiration. And now right down here in the center of the screen, we can see a few of the available strike prices available for this expiration. So in this case, we can see there are three here currently, starting here at 237.5, going out to 242.5. If we wanted to expand that list out further, we could either hit the More button on either side of those strikes, so simply come up here and hit More. Now I can see a few more strikes above it. Or we could also head up here to the upper right hand corner of our option chain, where it currently says Strikes 3. Simply click on that. Then down below in this drop down menu, we can then select how many strikes we wanted to see. Then down below in the menu here, we can then select how many strikes we wanted to see, which in my case, I'm simply going to come down here and click on 12. Coming back down to the option chain, if I were to scroll down a little bit, you can now see a few more strikes have been added, beginning here at 225 and going all the way out to 252.5. Now, if we were to look to the left of that strikes column, we're going to be able to see all of the available call options. To the right of that strikes column, we're going to see all of the available put options. You might have also noticed that in each of those columns, we can see a bunch of numbers flashing across the screen here. And here at the top, we can also see what those columns represent. So at the moment, it's showing me the current delta, the probability in the money, and the current bid and asking price. So essentially, what are those options trading for right now? If you ever wanted to edit those columns, you could simply do so by clicking on the gear icon at the very top of our column here. That will then display all of the columns we currently have visible over here on the left-hand side, and then all of the available columns over here on the right-hand side. Now in my case, all I want to do is get rid of probability in the money. So I'm going to come over here and click on the little red circle here. And now what I want to do is replace that with volume. So we're coming over here and clicking on the little plus sign next to volume. Now that that's done, I'll just come up here to the upper right-hand corner and hit close. And now you can see that brand new volume column has been added. And now I can see exactly how many contracts have been traded on each of these options contracts today. But really, that's going to be the absolute basics of the option chain and how to customize it just a little bit. When it comes to placing the trades themselves, it's actually a relatively simple process. You're going to want to click on the asking price when you want to buy and the bid price when you want to sell. The very first of the spreads that we're going to be creating today is going to be a long vertical spread. This could be done as either a long call spread or a long put spread, depending on whether you're bullish or bearish on the underlying stock. Now, in this case, let's just say for example's sake, we are bullish on Microsoft and we think it's going up. So in that case, I want to buy a long vertical call spread. To begin, we're going to first start by finding the expiration that we want to trade. And since over here on the left-hand side, I currently have the January 20th expiration selected, we'll go ahead and just let that be. I can then come down here below and find all of the available strikes on Microsoft right now. And now what I want to do first is find the option that I want to buy. And in this case, let's say I wanted to buy the call option right at the money. So in this case, the 240 call, which over here on the left says is currently trading for 725 by 730. Like I mentioned a second ago, whenever we want to buy an option, we simply need to come over here to the current asking price, $7.30. And since I want to buy it, I am just going to click on that number. You can then see that as soon as I did that, it actually built out an order ticket down here below to buy 10 of those 240 calls, and currently they're trading for 730. But in my case, since I don't want to just buy that call option, I also wanted to sell a further out of the money call against it. What I can do is then come down here and actually find the next strike that I wanted to sell. For this one, let's say I wanted to go out about $10 further out of the money. So in this case, that would be the 250 call. And now in order to sell that, all I have to do is come over here to the bid price, currently trading for 330, and click on that number. You can then see that as soon as I did that, it actually identified the trade right down here below. So right here, it's saying we're about to buy 10 verticals on the 240 by 250 strikes at $3.98 overall. Right below that, we can see each individual trade. So right here, it's saying I'm buying 10 of the 240s. I'm selling 10 of the 250s, and that's what's going to create the long vertical call spread. Now I could also adjust that if I wanted to. So in my case, if I didn't want to buy 10 of these, I only wanted to buy 2 of them, I'll just come up here to the top and adjust both of these quantity box down to 2. Down below that, I could also adjust the price if I wanted to. So at the moment, it currently says I'm putting in the order at $4 even. And if we look to the left, that's actually the current mid price right now. Now that mid price is going to be constantly changing, and here you can already see it's adjusted down to $3.98. But all you need to keep in mind is that's the midpoint between the current bid and asking price on the spread right now. Now because we are buying a long vertical call spread, because we are buying it, the best price that we can buy it for right now is $4.05. At that price, I know I could buy this spread right now. I would fill immediately. However, to the left of that, we can see the midpoint, like I just talked about, and that's the midpoint between the bid and the ask. And most of the time, most of us option traders out there are always trying to get the midpoint, because essentially that means that we're both willing to give up a little bit of money. We're saying, hey, you as the seller, are you willing to meet me in the middle? Can you come up a little bit from $3.90 up to $3.98? And me as the buyer, I'm trying to come down from $4.05 down to $3.98, and again, we can meet in the middle. If I instead wanted to try and get a better price, I could come over here to the price box right here. And let's say I only wanted to get this spread if it dropped down to, let's say, $3.50. In this example, I am using a limit order, which means I only want to buy this spread if I can get it for this price or lower. And to the right of that, I also have it marked as a day order only, meaning if it does not happen by the end of the day today, just go ahead and cancel the order. I do not want to try again tomorrow. Which in this case, this is exactly what I want to do. Everything's built out correctly. So now in order to place it, I am just going to come down here below and hit review. It'll then give me a little confirmation just to make sure everything looks right. And since it does, I am just going to go ahead and hit send one more time. Now that the order has been submitted, in order to check on it, we will just come back here to the positions tab in the upper left-hand corner. Now coming over here to the right, if we were to look in the activity section, we can see that open order to buy those 2 vertical spreads on Microsoft. And here it's telling me I'm trying to buy it for $3.50. It's currently $3.95, which is why I have not bought it yet. Now later down the line, if I wanted to adjust this order ticket, if I wanted to get a fill immediately, what I could do is simply come over here to the left to the little checkmark box. Once I've checkmarked it, if I were to come down here to the very bottom of my screen, then come over here to the far right-hand side, I could either outright cancel this order or edit it in some way. For this one, I want to edit it, so I'm going to go ahead and click on Edit Selected. It'll then take me to the order ticket once again, and right here, I'm going to adjust up the price to the current asking price. Because at that current ask of $4.05, I know I could fill immediately. Now to place it, I'll just come down here below and hit Review, then hit Send one more time. We can now see that the order has been submitted, and if I go over here to the Positions tab, come back down here to the Positions section over here on the right-hand side, and come down here and click on Microsoft, you can now see my vertical spread on Microsoft right here. I've got 2 of the 240s, I'm short 2 of the 250s. If at some point I wanted to outright close this vertical spread, I would simply come up here and click on Microsoft. It'll then take me to the exact same page as before, and right here I can see the Microsoft trades. You can also see on the left-hand side that all my trades are currently checkmarked. And if I now come down here to the lower right and hit Close Selected, because both of those positions were checkmarked, it's saying I want to close out the entire vertical spread. So right here, it automatically builds out exactly what I wanted to do. I am now selling to close the 240s, buying to close the 250s. And now down here below, I could specify the price at which I wanted to sell it for. And remember, since I bought it for 4 or 405, I don't exactly remember what I bought it for. If I want to sell this for a profit, I need to sell it for anything more than $4.05. So in this case, I'm going to adjust this up to, let's say, 7. I only want to sell it if I can sell this spread for $7 or higher, and I'm going to make it good until canceled. So if it ever goes up to 7, I want TD Ameritrade to sell it for me automatically. Now to place that, I'll just come down here to the lower right and hit Review, then hit Send one more time. But again, that is how you're going to trade a long vertical spread within ThinkorSwim. Now on the other side of things, you may at times want to sell a vertical spread. To do that, let's go ahead and pull up a different stock ticker. So for this one, we'll come up here to find a symbol, and for this one, we'll type in Square, SQ. Just like before, we'll come down here below and open up the option chain. I'm then going to select the exact expiration I want to trade, and for this one, let's open up same time frame, January 20th. If I were to scroll down just a little bit, we can now see the available strikes right down the center. And remember, for this one, we are going to be selling a spread, and this means that we're going to be benefiting from time decay and from volatility decreasing. It means we're not as directional as the previous trade. We don't necessarily need the stock to go in a certain direction to make money. It could just stay the same, it could go up, it could go down a little bit. Either way, we want to make money. So in this example, let's say we are slightly bullish on Square. Really, we just think Square is going to do a whole lot of nothing for the next few weeks, and we want to make money from that. So in that case, if we are more bullish than we are bearish, we're going to be looking at selling a put spread. So to do that, I'm going to first begin by finding the put that I want to sell. And I'm going to be selling a 30 delta put, and over here on the right, we can see that would be the $56 put, which is currently trading for $227 by $231. In order to sell that put, I'm simply going to begin by clicking on the bid price of the put, $2.27. Just like before, it builds out the order ticket down below to just outright sell those puts, which in this case would be a naked put or a cash secured put. And that's going to have a lot of risks to the downside, because I'm essentially saying right now I'm willing to buy 1,000 shares of Square at $56 a share. So essentially, if things go completely wrong on this trade, as of right now, I could lose $56,000. And right now, I don't have $56,000 to lose. I'm not comfortable losing that amount of money. So what I want to do is buy protection on this trade. So I'm going to come over here and hit the More button so I can see a few of the further out of the money options. And now what I want to do is buy my hedge. And in this example, I'm just randomly going to pick the $50 put. And to the right, I can see it's currently trading for 91 cents by 93 cents. And again, I really want you to think of this as insurance on the spread. So I'm going to go ahead and buy that insurance by clicking on the asking price, 93 cents. And now coming down here below, you can see it again identifies exactly what I'm about to do. I'm about to sell 10 verticals on the 56 by 50 at $1.39. For this one, I'm going to go ahead and leave it set to 10. So I am going to sell 10 verticals. I'm going to be collecting $1.39, which means that's the absolute most amount of money that I could ever make on this trade. And if I was happy with it, if I'm happy with that amount, I'm happy with everything that it says here, I am just going to come down here below and hit review. We can again see a little order confirmation just to make sure everything looks right. And now in order to place this, we are just going to hit send down below once again. Now that the trade has been submitted, if we were to come back up here to the positions tab, you can see over here on the right, I only have a working order to sell that Microsoft vertical, which means the Square vertical has already filled. And now to see that, I'll just come down below to my positions section. Go ahead and find Square and click on the little arrow to the left of it. Now we can see down below that short vertical put spread that I sold. And for this one, because I sold the 56 and bought the 50, the only thing I want to happen with this vertical spread is for Square to stay above $56 a share. As long as Square stays above 56, I could make about $1,300 on this trade. So again, this is a pretty neutral strategy for the most part. Square could stay the same, it could go up, Square could even go down by $4.50 a share, and I would still make $1,300 on this trade. But again, that is how you're going to trade both long and short vertical spreads within here. The next one we're going to talk about is called an iron condor. And in order to see it, let's go ahead and come back up here to find a symbol. Go ahead and throw in, let's say PayPal for this example. We'll then come back down below and go ahead and open up the option chain. I can then come down here and open up the expiration I want to trade, which in this case, let's go ahead and flip it up a little bit. I'm going to come down here and open up the February 3rd expiration, which is about 42 days out. We can again see a few of the available strikes right down the center here. And again, what I want to do is sell an iron condor. And all this is essentially just two short vertical spreads combined into one single transaction. We're going to be selling a vertical put spread and selling a vertical call spread all at the exact same time, which then means that we want the stock to remain within a certain range. So if for some reason I thought PayPal was going to stay somewhere between $60 and $75 a share for the next 3 weeks or so, I could actually create an iron condor and make money if that happens. And again, all this is a short vertical put spread and a short vertical call spread. So let's go ahead and begin by selling the put spread first. We'll come up here to the top and hit more to expand the list of available strikes. And if I remember right, I said I thought it was going to say somewhere between 60 and 75. So I'm going to come down here and find the $60 put, currently trading for $1.75. And since I want to sell that one, I'm going to go ahead and click on the bid price. I now want to look a little bit further out of the money to buy a hedge. So I'm going to come back up here and hit more once again. And for me personally, I typically sell 5-point wide iron condors. So I'm going to come down here to the $55 strike put, which is 5 points further out of the money. And since I want to buy that one as the hedge, I'm going to come over here to the right and click on the current asking price of 98 cents. And again, all that's doing is protecting me in case I am wrong. In case PayPal does actually move down quite a bit and it moves down well below 55, this is my protection in that event. But now that we've got the short vertical put spread built out, we now need to scroll down and do the exact same thing on the call side. Now, since I believe it's going to say below $75 a share, I'm going to come down here and hit the more button. I can now see the $75 call, and now in order to sell that call option, I'm going to come over here to the left and click on the current bid price of $2.30. You can now see that that short call has been added to the order ticket down below, and now the only other thing I have to do is buy the hedge on the call side. And since I want to keep this equal distance width, I'm going to come over here to the 80, because that's 5 points further out of the money, come over here to the asking price of $1.34 and click on that number. Now that that's done, you can now see down here below, it tells me exactly what I'm about to do. I'm about to sell 10 iron condors. I'm selling the 60 by 55 by 75 by 80. We can also see that if I were to do this right now, I could collect about $2.05 for it, which since I'm doing 10 of these, that would be $2,050 in potential profit if this trade were to expire worthless. And because this is a neutral transaction, all I need to happen to make that $2,000 is for the stock to stay somewhere between 60 and 75 for the next month or so. In order to place it, we can now come down here below, just confirm the price, confirm the order type, if I just want it good for the day, and then to submit it, we'll just hit review, and then hit send one more time. Like we've done in all the previous examples, to check on it, we'll just come back up here to the Positions tab, coming over here to the right-hand side and finding, I believe I said PayPal. Doesn't look like it's in the list down here, which means it has not filled yet. And looking back up here to the activity section where it shows me all of my open orders, you can see it is still an open order. I haven't actually sold it yet. But I think you get the general idea of how to create the iron condor within here. And remember, an iron condor is a completely neutral strategy. You think the stock is going to stay range bound. The very last spread that we'll be discussing is the butterfly spread. Like the iron condor, it is generally considered a neutral strategy, but I like to think of it more as a lottery ticket. With the butterfly spread, which we will go over in just a second, we're essentially just picking a price at which we think the stock will be at a specific time on a specific day. So picking the price, the date, and the time correctly is almost impossible, and that's why on a butterfly, it's essentially a lottery ticket. And generally, you are never going to try and make the absolute max profit on the trade. You're only going to try and get a piece of it. But again, in order for us to see this in practice, if we were to come up here to the top where it says find a symbol, go ahead and throw in AMD for this example. Come down below and open up the option chain. But now we can come down below and pick the expiration date. And for butterflies, I don't generally like to go out too far out in time, since nearly all of the movement on the trade is going to happen in the last day or so of trading. So in this example, I'm going to be opening up a trade on the December 30th expiration, about 7 days out. We can now come down below to the strikes, and generally speaking, when you create a butterfly, you're going to be putting it right at the money, roughly right at the current price of the stock. What I now need to do is come over here and actually sell the at the money puts, or the at the money calls, it doesn't really matter. But in our case, we're going to stick with the puts, so I'm going to go ahead and click on the bid price. What I now need to do is pick an option on either side to buy as our hedge. So in this case, what I'm going to do is come over here and let's go 4 points on either side. So I'm going to go ahead and buy the $60 puts. And if I were to scroll down just a little bit, I can now buy the $68 puts as well. Looking down here below, we can now see the 3 trades that I've essentially built out. I am selling 10 of the 64s, buying 10 of the 60s, and buying 10 of the 68s. But we're not done quite yet, because in order to turn this into a butterfly spread, I actually need to sell twice as many of the at the money puts, the ones that I'm selling. So coming over here to the left and adjusting the quantity here, I'm going to adjust that up to 20. And now you can also see the identifier for the trade has also changed. So right here it says I'm about to buy 10 butterflies, and it tells me the 3 strikes that I've chosen. You can also see that down below that, it tells me the total cost on this butterfly is going to be $162. Now that $162 or now $161 that I'll be paying is also the max loss on this trade. So that's going to be the most amount of money that I could lose if I were to buy this butterfly. On the flip side of that, the absolute most amount of money that I could make on this butterfly is going to be the width of the spread. So in this case, because the spread is 4 points wide or $4 wide, the most I could ever sell this butterfly for is going to be $4. And since I'm going to be paying about $1.60 for it, that means the most amount of money I could ever make on this trade is going to be $240. And again, for the most part, you are never planning on making that full max profit because almost never are you going to hit that price exactly. It's going to be almost impossible for you to predict exactly where AMD is going to be on a specific day at a specific time of day. So really, I'm only trying to get about 25% of that max profit or so, nowhere close to the total. But now that everything's filled out and I'm happy with it, in order to place it, we'll just come down here and hit review, then hit send one more time to place it. To check on it, we'll come back up here to the positions page. And right over here on the right, you can still see it is a working order to buy those 10 butterflies. So I have not bought the trade yet. And I know that was a lot to take in, and especially if you are brand new to spreads, but with a little bit of time, I promise you will get comfortable with all of this. Hopefully you now feel at least a little bit more comfortable with how to trade option spreads on the ThinkorSwim website. If you're already familiar with the ThinkorSwim desktop platform, you should have no issues placing those exact same types of trades within the web app. Now, if you are looking to learn more, consider checking out this video next. You might find it helpful as well. Otherwise, have a great rest of your week, and I'll see you on the next one.